Rosario, welcome to Living Off Rentals.
Thank you, sir. Thank you for having me on.
Absolutely. It's a pleasure and an honor. And it's something that I was thinking about, and I should have had you on a long time ago. Rosario and I go way back. I think I remember meeting you for the first time. I think it was in your office in Chicago. I think it was probably like 8 years ago. And we were flipping heavily at the time. You had just, I think, finished working with the hedge funds, or maybe you still were. And I was just like blown away by the volume of deals that you were doing at the time, or had done. It was just like a different time, that's for sure. So yeah, so and then since then, Rosario has started ClickInvest, which is a platform we'll talk about during the interview that I think is going to be beneficial to a lot of people in this community. And I remember, we were just talking before we hit record of the early days of ClickInvest, where it was like just before there was even a platform, you were just scouring for deals and you'd send them out to investors, and it was like a PDF and yeah. And so now it's like blown up into an actual online platform in multiple cities, and you handle the whole process for people now, and it's so cool. So but I'm just honored to have you on here. You're a super high character guy. You're as genuine as they come. So I love having people like that on this podcast, and your wealth of knowledge for our audience. So I'm going to let you talk now.
Yeah.
But if you can fill in your background leading up to the launch of ClickInvest, and like what kind of how it transpired to end to that point where you decided this is the path I want to take.
Absolutely. And first off, thank you for having me on. I love seeing what you're doing, and I know we've been in the same space for a long time. I've always greatly respected you and have a lot of the same friends. And then seeing what you're doing now with living off rentals and on the Airbnb side as well, it's really awesome. So
thank you.
I appreciate it, man. And I love pics of you and your kids. Like that, dude. If I were to share anything, so we actually just had a call with our advisory board, and in total transparency, we were just talking about like, okay, where's it going to go from here, and this and that. And Jeff and I, my partner, we're both men of faith, and we're both family guys. And when we came together, we came out of the institutional space, and we said we're not going to be slaves, right, to the desk. And we had the option: either we were going to go the route of raise all this capital and do this and do that, and and burn at both ends for 4 years and try to make something, or be with our families. And we decided to be with our families and build a business around us, and not be slaves to it. So if I'll start with that, and if you guys get anything, like, let that be it. At the end of the day, you're going to make money, you're going to lose money, have assets, don't have assets, whatever. If the people that you're closest to don't feel connected to you, then it's really all for nothing, right?
Yeah.
So
yeah. How did you learn that lesson along the way? Because I think that's a realization a lot of investors have at some point. In the beginning, it's like, I'll work 24/7 just to get a deal, because you're trying to like pay for groceries. And then, as you evolve, you start to realize it's more about lifestyle. So for you, how did that come about?
You said wealth of knowledge. I would rather say a wealth of losses, or a wealth of
mistakes or
decisions, or whatever. So I got in the business in 2003, and I've had the luxury of losing money on several occasions, and every time was always like, this is it, and you're gonna knock it out of the park. So I got in 2003, was wholesaling, then started buying rentals in like 2005. But bought them wrong, rehabbed them wrong, managed them wrong. And in 2007 came, got wiped out, lost them all, and had several flips going along the way as well. So had 8 rentals, and had, I don't know, it was like 10 flips. Yeah. And 2007 hit, and phone call from LO, or from the loan officer, was, can't get a loan, right, for my buyer. And I'm like, okay, well, what about the other deal? Yeah, you can't get it either. So whatever, '07 happens, lose everything, and started Resurrecting Real Estate, which was our original name, in 2009, and was servicing a lot of the banks, the REO servicers, so Fannie Mae, Freddie Mac, B of A. So I took my investor experience, and they really liked that. So we grew as an REO office. But and something I guess to learn here too. So when I got smoked, I still have wounds from '07, '08, '09.
Oh yeah, that's painful. It
Oh
doesn't just go
gosh.
away.
Yeah, when you're having 6-figure months and then that goes away, and then you have debt, and we worked out, we had a lot of foreclosure workouts and short sales and whatnot, but it was painful. So we got an REO side, and then in 2011 we were approached by Invitation Homes, which I mean now is publicly traded, owns after mergers, I think 80,000 homes, something like that nationally.
Wow.
And I thought that was it, right? I'm like, oh man, we're gonna crush it, and we did. For 2 years. We sold a lot of homes. I was ranked nationally by Wall Street Journal. Had a ton of staff. You know, you were asking me about staff earlier, and
Yeah.
what's funny is because we have a lot of agents and all that, but they're not staff. They're
Right.
1099s. Big difference.
Yeah.
Where back then I had a lot of W-2s, like
I see.
a lot, 20 something, maybe more.
Wow.
So our overhead on a monthly, so just real numbers. I mean, with me, I'd rather just be transparent. There's
Yeah.
no, I've lost a lot, and I've made a lot and lost a lot. So we were gross commission revenue on a monthly basis, gross commission income was like 300K a month. Okay.
Wow. Yeah.
So, but my overhead was just under that with bonuses, with everything else. So the margin sucked, and you know, ranked fourth. And it was so funny because it was like Armani suit, and you walk in and you're big stuff.
Yeah.
Yet the guy that sold 30 houses or 40 houses made more,
Yeah.
you know, on a net than I did, because all my overhead.
Oh, I can relate. Trust me. Yeah.
And well, in that whole season, you know, here I am, I'm like, yeah, I'm a man of faith and yada, yada, yada. And I love Jesus and I love my family, and I'm never there.
Yeah.
You know, so I'm working crazy hours, because when you work with hedge funds, there's no shutting off. I mean, we're sourcing at 3 a.m, like looking for deals and doing all that. There's no, and on the weekends, it didn't matter. And that was a rough time, like in our marriage too, because my wife's like, you're not around, what's going on? I'm like, oh, we just need to grind it out. We need to grind it out. Well, we get to the end of that. I get a phone call, and from the big hedge fund, and they're like, thanks, we filled our order. We'll call you if we need you again. I'm like, what do I do with all my staff?
Yeah.
So 4 rounds of layoffs.
Oh.
I had to let go of almost everybody. And when you saw us, that's what was left of an operation that at one point had close to 60 people between internal, field ops, agents, VAs, and then we were down to 4 people in a small office in Chicago.
Yeah.
You know?
And I had no concept of the transition that you had just been through either at the time. I was just like, you're telling me these numbers of deals and stuff. I was like, what? That's crazy.
Yeah.
Wow.
It was, yeah. So that's what, I mean, I feel like God's always, and in my spiritual journey, every time my head gets this big, God's really good at popping it, you know?
Yeah. That's right.
So, yeah, that's really led to focusing more on lifestyle, because right around that time is when Jeff and because I worked with Jeff when he was at Invitation.
Yeah.
And then he left there in 2016, and he's like, what are you up to? And Jeff's a genius. Like he's definitely one of the smartest guys I know in real estate in terms of his financial analysis. I mean, whiz on Excel, like what he's done with our system. He spearheaded a lot of development. I'm the idea guy, but he's execution. Right.
Yeah.
So, and when we came together, I mean, he invested 4 years of his life working for a hedge fund and lost 4 years of his life essentially because he was always traveling, you know?
Yeah.
And when we came together, it was like, look, we can do this, but not at the expense of our families anymore. So
yeah. Yeah. Wow. Yeah. That's the other side of it. You know, everyone hears hedge fund and it's like, I remember because we sold a bunch of our flips back then to hedge funds, probably to you guys. And yeah. And it was, I mean, it was great. I mean, I was glad they came into the market because that was a time where you could buy properties, and it was a huge buyer's market. And the challenge was the selling side. Now it's the exact opposite. But then the hedge funds came in and they were buying above the market price that we were, above what we could sell to a retail buyer. And I thought at the time, I was like, these guys are nuts. Like, they don't know how to run numbers. Like, they're paying this much money, buying all these rentals is going to be such a headache. And I didn't know the market was going to, triple or whatever it's done since then. But yeah, there's a flip side of it, and that's that it's not a relationship. It's not. It's just a big corporation, and you're just a cog in a wheel. So based on that experience, then how did you evolve? I mean, you didn't just jump from that to ClickInvest. So how did you start? I mean, what was the next step for you?
Yeah, so we closed spots north of 2,000 deals in like 3 years, somewhere around 3 or 4 years. Wow. Okay. So again, big numbers, but if you're not running your business and don't understand net income, like it doesn't matter, right? Everything is gross. And I say gross is gross. Gross is,
right? Revenue and profit are very different.
Very different. So we, at that point, a lot of guys, so Kevin Werner, Daniel Rosen, guys from Renovo. Gosh, I haven't talked to them in such a long time. So Kevin Werner,
Daniel Rosen was on the show actually.
Oh, was he?
Around episode 45, 50, somewhere in there. Yeah.
Love Daniel Rosen. Great guy.
Yeah, he's awesome.
Right when that transition happened, me trying to keep all my employees on, I'm like, I'm just gonna go find another Blackstone. Like, that doesn't happen.
Yeah.
So I'm like, man, what am I going to do now? And honestly, I almost got out of the business at that point because I was so burnt out and had reached like the pinnacle, like top agent in the state, ranked, all this stuff. And I'm like, oh my gosh, where'd all the money go? Like it went away. And I was kicking myself because during that time, I had access to all the property. I could have been picking off deals, right? And I didn't. Because part of our agreement was we couldn't buy, like we couldn't compete against them, nor could we work with other hedge funds. And I was like, okay, well, if that's what it says, I can't, right?
Yeah.
So I didn't buy that whole way up.
Wow.
Like, oh man, now what? So I was thinking about giving up, and Kevin Werner and Daniel Rosen actually approached me on different occasions, and they were like, you guys have this like machine, how to find deals. You actually put real numbers on it. And like, why don't you work with local mom and pop investors instead of working with these hedge funds? And I'm like, oh gosh, I don't want to work with mom and pop investors. Like, they're too emotional or they don't know what they're doing. But at that point, we really had no other thing going on. So we just started from scratch. And that's when we had connected, because we're just like, hey, any investors we can talk to, let us help find you deals and let us just put them on a platter. And so it started out very very manual. I mean, we literally would put comps together in a PDF and shoot, in the body, just rough assumptions on what you could get for a flip. And whoever responded first, we'd go chase down that deal and get it locked up. And then we started, I'm not a whiz on Excel, but started to put together what made sense from a sourcing perspective. It was more filtering. So, okay, I took what my analysts were doing and I'm like, you guys are following the same process over and over again as I do, right? We just didn't document it. So we documented the process and we started typing that into Excel and did some programming, not me, outsourced the programming. But like, this is how we get to a rough idea of what works and what doesn't. So we built this model out, and that's when I met with Jeff, and Jeff's an Excel wizard. And he looked at it and he's like, you didn't come up with this. I go, no, I did. And he's like, do you realize if we had this at Invitation Homes, we wouldn't have needed all of you agents? And I'm like, so is that a good thing? And he's like, yeah, he's like, I want in. So that's when we partnered. But he took it to a whole different level. So yeah, it started out very manual, and then we built a dashboard to where you can go in and actually search and filter and find deals. And then, then we rolled it out into the rental side of things, and then into Florida, and just growing the markets now. So
I see. Got it. Okay. that fills in some blanks for me there. And did you always want to be on sort of like the transaction side of things? Like what's drawn you to that instead of being the
An
investor
owner,
yourself?
an
Yeah.
owner. Yeah. So going back to doing things wrong, right? So when I own rent, and I don't want to say it's wrong, but when I owned rentals, I treated it more of like a ministry than I did a business,
Mm, yeah.
right? So my cash flow was horrible, right? But I also rehabbed wrong. I didn't understand what I was doing. Um, the service side just kind of grew. I mean, you either build a business or you own a business, right? Or
Mm,
you run a business or you employ. I mean, whatever, you see the quadrant. Um, from the property side, I think twofold. I think one, I didn't have the stomach to get back into it. Just being
yeah.
honest. Like at the
Hmm.
time, like multiple mortgages and this and that, and then having to go through that was a painful deal. Um, to where I wanted to be in a position where I'm like, if I don't have the liquidity, I see so many people that invest who don't have the money, right?
Yeah.
And they scrounge up whatever or scrap up 5K, 10K, 15K, and they're like, I'm gonna go do it. And I'm like, do you have a buffer? What happens if something goes wrong? You don't
Yeah.
have anything there. And I think because of how I came up, that was the thinking, like, no, I mean, that's how you do it. I was always terrified to get back into it.
Got
And
it.
then at the period of time that we were servicing the hedge funds, in total transparency, the money wasn't there. Like we were making so much on the top line, but I didn't keep
Yeah.
it,
Yeah.
you know?
Yeah.
And I always said, like, if I'm gonna get back into it, I'm gonna do it, I'm gonna have the buffer to do it. I'm not just gonna do it and take on this debt. I like not having debt.
Yeah.
you know,
Yeah.
but
Which
I was
seems
actually
foreign in real estate investing.
right. So a few things. One, it's not that I think there was a season for me where I had to do what I'm doing now, and praise God, like we make good money doing what we're doing. So I think there's a little bit of that alongside with it where it's like, like
Yeah.
in so Andrew Holmes,
Yeah.
right? All
I think
right.
everyone does. If you drive down 294, you can see his
You
face every
definitely,
other
yeah, he's
billboard.
he's everywhere. All right. So that guy does not stop. Like we're friends, right?
Yeah.
He doesn't stop. And he's always like, dude, when are you gonna start buying rentals? I'm like, dude, look, I know long term, yes. Okay, yes. It's the smartest thing to do. Why wouldn't you? Right. I'm like, but right now I'm spoiled. Like I walk to work, I do what I do, and it is a margin game. At the end of the
Right.
day, I run a business. I'm pretty involved in my church. I have my wife and kids. Like, it's not like, yeah, I'm gonna go just start buying rentals and have no margin to do it. Like,
Yeah.
the reality is you need to be involved. People that think it's that easy without putting any time into it, like, come on, I did
Yeah.
it. Like,
Yeah.
it's still time intensive. It's not like,
Hmm.
so that
Yeah.
answers that. But um, so Jeff and I, right where we're at, because it was the transition was, so just a little bit of intel or inside baseball with our agents. We've always said we can't compete against our clients, right?
Okay. Yeah.
That was another big thing. We built this platform and Jeff and I stared at each other like, that's cool. Like, good for everybody else. Like, we
Yeah.
can't really leverage it. Up until now, I think we're entering a season where we are going to get back into the market,
Yeah.
but because opportunities, the way they're presenting themselves, we can approach it. So we're not flipping, we're not looking at traditional rentals, right? That's why this is a timely call. So we are starting to look at more of the build to rent model and also Airbnb.
Yeah.
So that's why this was a timely call. So
Yeah.
um,
Cool.
but yeah, so
Very
I
cool.
think there was a season. There was definitely a season for me to figure out a lot of what I did and what I did wrong. Um, instead of just jumping in blindly and risking money I didn't have.
Yeah.
So
Yeah. No, that all makes sense. It's all perspective, it's all like lessons learned along the way. It's got to be right for your situation. So that it makes sense. You were talking about the how the platform evolved or how the algorithm evolved, and so I'd love to hear a little bit more about the value that ClickInvest provides, how does it work? So I think
Yeah.
that's a question that a lot of people probably have, like if they've never heard of ClickInvest, like what's the value that somebody gets from it?
Yeah, so basically algorithm is such a fancy word, right? I like to use filters. So
Okay.
think of it this way, when we were sourcing for invitation homes, or if we were sourcing for guys that were looking for flips, there's criteria that people look for, right? Whether it's an ROI, if you're buying a flip, you're looking at it from an ROI perspective. But how do you get to the ROI? You need your ARV first, right? So
Yeah.
we would get the ARV and then work backwards. And a lot of guys use this 75% rule, less, rehab, whatever. This was all stuff we were doing instinctively. And then we found out there were names for it, or the 1% rule, and all these things.
Yeah.
We're like, oh, wow, there's actually a name for it. Like, okay. So we built those models out. It was very manual. What started out as a souped up Google sheet, right, with all the formulas in. We would have VAs that were dropping addresses in, and then we were pulling data from the MLS. And then the last scrubber was always the analyst. And our lead analyst has been with me for 11 years. So you probably saw her. Yeah, you saw her in the office. So at this point, it's hundreds of thousands of valuations, right, that she's completed.
Mm-hmm.
So the analyst would be the last eyes on the deal, and they would firm everything up, and then the deal would go out. What we did was we taught the algorithm how to do that. So it all starts, and Jeff would probably, no, Jeff's fine. He'd be like, what do you say? It all starts with the ARV. So our algorithm essentially will find a close enough model match to the subject and figure out what the ARV is, and then work backwards. And there's rehab models that figure out what the rehab should be based on several characteristics of the property, taking into consideration year built, all those good things. And then it'll pull comps as well, and then give the analyst a rough idea. And basically what it's doing is filtering. So instead of the analyst going through the MLS, because there was a time when we were sitting there hitting refresh, multiple people hitting refresh, waiting for a new property to hit or a price change, whatever, and then you go attack it. Now the system does that, and it runs, I think, every 60 to 90 seconds, constantly refreshing. And instead of the analyst going out to look at 1,000 houses on a daily basis, or try to get through 1,000 houses, the system filters it down to a small chunk that they can focus on, that's based on high probability. So we grade every single property in the MLS. There's actually a color code. So it's either green, yellow, red. And if it's a green property, it means it's a high probability property. And that's what the analyst is going to focus on. So the analysts are just focusing on green properties in our system all day long. And then out of that, send out what works. So it's not like, Zillow's got their Zestimate, right?
Yeah.
Which, if they can't figure it out spending billions and billions of dollars, right?
Yeah.
We're not going to figure it out. So we use tech and formulas to filter, but then the human eye to make the final decision.
Yeah. Yeah. That's great. Yeah. That's what I was just explaining on a webinar I recently did around the Airbnb. Like, a lot of people go to AirDNA, which is their data source, and say, oh, well, the occupancy here is 70%. So that's what it's going to be. Like, yeah, that's for like the whole city. So let's, narrow it down a little further and look at some other data points here. And so that's awesome. So somebody wants to get involved. They want to start getting properties sent to them that have high probability of being a good investment. And I assume you label them, this would be a good flip, or this would be a good rental. Yep. And so they pay to join the platform, and then they start getting access to these like right away. Is that how?
Yeah. So think of it as like the investor's version of Redfin. So they log in, they have a call with Mark, or they have a call with Tommy. Tommy sets them up on their platform, fills out their company profile. So what's neat, and back in the day, it was just a PDF of comps, and that was it, right? Now every single deal has, and it's been this way for a few years now, your assumptions dialed in. So it's your own deal analyzer. So it's your cost of capital, your buy side cost, long-term financing, whatever. So you can see it from a flip perspective and from a rental perspective, and soon will be from an Airbnb perspective.
Nice.
So all that will be in there. And then the client can decide on their own, do I want to approach this as a flip? Do I want to approach it as a rental? Make that decision. And then they click submit offer. And then there's sliders in the package. So if they think the ARV is lower, because that's what I love about what we do. We always preach transparency, right? So all the comps we selected are right there, and you see which ones we selected because they're highlighted yellow, but you also see all the other comps, right? It's easy when a wholesaler or somebody sends you a deal and they're like, oh, here are the 3 comps. What about the one next door?
Yeah.
Get them down there. Right. So all the comps are there. You can click on them yourself, see them. You could either zoom in on a map view or go into a list view. So everything is there. So, and then there's sliders, so you can adjust right there for yourself if you want to get more aggressive, less aggressive, whatever. And then you just click submit offer. And then you have an assigned agent. It goes into their queue. They submit the offer and then go chase that deal for you until they get it or not get it. But, and then they come back with whatever the results were. So.
That's amazing. That's awesome. I mean, and I remember when it first started, and it almost sounded too good to be true. Like it's like hands off, like someone's basically handling all the process for you. But obviously, it's worked because it's grown. So can you talk about like how this has worked for a few of your clients? Like you don't have to like give specifics, but some like examples of more successful clients, like how they built their portfolio or whatever.
Absolutely. So I'll pick on Andrew again, even though he's like, he's a beast in our market.
Yeah.
What we've learned, and again, and being totally transparent, is when we bring somebody on, it's the reality is we're going to put a lot of vetted deals in front of you, and we'll submit as many offers as you're capable of clicking on, right? But the market is still the market. Right? A lot of times you get people that come in and they're like, oh, this is the greatest thing ever. I'm just going to click and I bought a house. It's like, no, like you're submitting an offer, right?
Yeah.
We now have to submit the offer. We have to pursue it.
Yeah.
There's pull through. It's not, you're going to magic, because somebody will say, oh, well, what if I submit 15 offers and get 15 accepted? I'm like, well, then you're either overpaying or you did some wrong.
Yeah.
It's not real.
Right.
Even Andrew, who I think is one of our most successful clients, his hit rate's probably 8%. Oh, hey, buddy. Hey,
I got a helper on this podcast.
Nice.
So, yeah. Hey, can you go back out, buddy?
Oh, that's the best. I tell you, if I'm ever talking to Mark, or if we're on a biz dev call or something, or anybody has a kid come in, I'm like, no, let him in, let him in.
Yeah. He wants to be a part of every podcast in some way. Usually it's like in the bathtub, he's screaming or something, but he's always,
he loves his daddy and wants to be around his daddy. So even Andrew with his expertise is probably around like an 8% hit rate.
Okay.
So 100 offers will get him 8 deals, right? 100 offers. Like I try to explain that to people. It's not like we're making it very easy to where if you wanted to submit 10 offers a day, 15 offers a day, you could do it within minutes. Like that's the advantage and the value add of ClickInvest. You're not sitting there like, oh, a new deal hit. Let me stop everything. And now you got to pull comps and you got to spend 15 or 30 minutes trying to figure it out. And then by the time you do all that, you're like, oh, now I either have to create the contract or call an agent to go do it, or I need to, oh, wait, I need to schedule an inspection. So what we're doing is giving you a lot of swings at the plate with just a very little time invested. And I tell people, if you log into ClickInvest every morning and spend 10 to 15 minutes just clearing out your dashboard, you're going to get deals accepted. If your numbers are realistic, if you're still, you think you're going to get a 25% ROI and, okay, the market's shifted, it's definitely more competitive than it used to be. So, but guys like Andrew have a lot of success because they know what they're looking for. They don't mess around and they go right to it. Newer clients, on the rental side of things, I think we make it real easy, right? I think our rental buyers can pay more than our flip buyers. I know they can, because flip buyers, for most of our flip clients, their spec is through the roof, right? The cost of trying to hit it out of the park on a flip, I mean, everybody's HGTV now and like, great looking house, but you made no money, right? So over improving, just going bananas, and then a few change orders later and there's very little margin. Where our rental buyers, if they're dialed in with their spec, they can make money, and especially if they're doing the MER method, whatever, or they're in it for a little bit of money, they still got great return. So we've done pretty good with a lot of Andrew students that come along. From the flip side, we have something called Click Direct, which basically is a deal on a silver platter. So because of the construction side, so I'll give you an example. So Jason Went, which is a client of ours, full-time job, didn't really have time to manage a project, and he's like, hey, this is what I want to make. And we're like, okay, no problem. So we found a deal for him in Mount Prospect. We walked it, put together a construction bid, brought it back to him. We're like, here's the deal. Here's the bid. We can go execute it for you. And he's like, yeah, done. And I think he netted some like 35K, like a true net after everything. It was like 35K. And I asked him, I go, Jason, how many times you go to property? He said twice. He walked it when he got accepted. And then I think he walked it when it was done.
Just mail me a check.
Exactly. And then you still get them like, well, I didn't make as much as I thought I was going to make. And I'm like,
yeah.
Oh, like, don't you understand? Like,
so essentially you're taking all the risk out of it for them. I mean, because that's once you start, that was when we were rehabbing heavily, that was always the big factor. It wasn't that you could find deals if you looked hard enough, but it's once you start that rehab, you've got personalities of contractors, you've got unknowns, you've got all kinds of crazy stuff. And you're kind of just removing that piece, which is huge.
Yeah. So we have 3 clients that I think of. Jason Went is one of them. It was Alex. Can't think of his last name, which is hilarious. He lived in Illinois when we bought the deal for him in Florida. Right. And so he lived in Illinois, bought the deal in Florida. We flipped it. It was a tiny house, but the whole project, I think, was 90 days from the time he bought it to the time he resold it.
Wow.
The buy was like 100, something like that. And it was literally like 20K in rehab. It was a newer built home, 2006. Should have kept it as a rental.
Yeah.
So bought it. His true net after hard money after everything was like 20 grand. And I'm like, dude, you invested 25,000, something like that, and made 20 grand on it. So almost 100% return on your money in 3 months. I'm like,
yeah.
Like, and then he's like, yeah, I thought, and you always I thought I was going to make a little bit. I'm like, you never even, whatever. That's the story of my life. But we tell people too, like, look, those are great examples. There's going to be times where they make less. There's going to be times where they make more. There's going to be times where they scratch. I think the biggest difference is, though, we're the ones dealing with all the nonsense. So you go do something else with your life, right?
Yeah.
And stop trying to pretend to be an investor, because the reality is, and this, like, the shows aren't reality. I mean, that's the furthest thing from reality, right? Like, and everybody wants to be a rehabber, and it's like, you better make sure you have the time and the money and the stomach for it.
Yeah. Well, especially if you've got a high paying W-2 job, to be able to just make 20, 30 grand on the side here and there while you're working a quality, high paying W-2 job, like, focus on that and let someone else make you that extra money. It's a no brainer. Now, if you don't, and you can do some of the stuff yourself and save, some money here and there, then maybe it does make sense for you. But yeah, that's a great point. Why the markets that you're in? That was what I was curious about. I know Chicago, obviously that's where we're both from. That was probably just a natural choice because you were there, but how'd you decide to expand to Florida?
So Central Florida specifically, there's this corridor from Deltona, which is on the East Coast, all the way through Orlando, through Polk County. One big city there is called Lakeland, and right into Tampa. And Jeff, being privy to all that data and information when he was on the institutional side, saw the markets that were strongest, and Central Florida was definitely one of the strongest markets, and had biggest upside in terms of growth potential. Population growth, taxes, no income tax, state income tax, tourism. I mean, you have all these great things happening in Central Florida. So for him, that was right away. I mean, when we partnered up and started talking about expansion, he's like, Central Florida. Like, it wasn't even a question. Arizona, I know, is hot. Texas is hot. We have no motivation to go there. I mean,
Yeah.
that is like the institutional battleground. Like,
Yeah.
it's very hard to compete against those guys. We figured if we could break into Florida, at least start here and build operations and figure it out, then we'll jump. So we have several markets. Indiana is actually one of them. Indiana, Tennessee, North Carolina, Minnesota, and at some point Georgia. It's just the data feeds in Georgia are a nightmare because there's several different MLSs all crossing over each other. And yeah, but Central Florida, just from a data perspective, made a lot of sense.
Yeah. No, that's awesome. That yeah, yeah, why fight an uphill battle if you can get the data that way?
Yeah.
That's awesome. That's great. So I mean, there's one other question I had here around your, I guess, and it kind of relates to you differently, I guess, than others who have been on the show, because you're more in the transaction seat than in the investor seat. But looking back on your journey, what would you have changed or done differently to speed up your success or to get you to the place you are now quicker?
I would have paid for help.
Okay.
So when, like, I look back at the rentals that I owned, and I made a lot of mistakes. There were guys that bought back then as well, and that was at the peak of the market. I mean, which is surprisingly, the peak now is higher than that peak was.
Yeah.
Bananas. But so I didn't know what I was doing. I was buying very old properties. When you look at a tax record and it says 1888, that's when it started. That's when they started tracking properties in Chicago. And most of the ones I bought were 1888. So who knows when they were really built. But I didn't know what I was doing. So I didn't buy right. I didn't rehab right. I didn't know what a good rehab bid was. I had no idea. From a property management side, I didn't know what was good or bad or what I should be paying. That's why I self-manage a lot of stuff, but I didn't know what I was doing. So I would have paid for advice. I would have paid for help. I would have gone to somebody who actually did it, and take their roadmap. You know, everybody wants to figure it out. Look, there's some not honor, what's the word? You know, kudos to you if you want to figure it out and work through it, but it's very expensive to do that. You know, and I mean, I lost 8 houses. I mean, that was expensive. I lost projects that we were flipping. That was expensive. So I would have paid to learn. What else? I would have really known what I wanted. I didn't know. Like, I allowed the market to force me into things I shouldn't have bought.
Yeah.
And that's a mistake I still see today that a lot of our clients make. We had a client bought a house in Tampa, not through us. It was from a wholesaler, and he paid $250,000 for it. And he flew into town and whatever. And we were talking, and he's like, yeah, I got this house under contract. And I said, who'd you get it from? Oh, some wholesaler. I'm like, goodness, give me the address. And we started dropping it in. And our analysis said we should have paid 175, and he was paying 250. And I said to him, I'm like, dude, you haven't closed yet. Why don't you get out of it? And he's like, well, I can't find anything else. I'm like, do you hear what you're saying? Like, you're going to lose money on this deal. But the thought for him, it was just the whole, like, I couldn't find anything else. So I settled.
Want to get going. Yep.
And I see people make that mistake all the time where they're like, well, I can't find anything else. So hey, it's better for you to keep your money parked than to go lose it. Like, what's the point of doing that? Absolutely. So I was buying single family homes that were frame, old, in areas that I shouldn't be. I don't want to steer people, but I wasn't familiar with the area.
Yeah.
So, so I would have sought help. I would have really known the product that I want, and I would have buckled up for the long haul, because it wasn't a just overnight thing and you figured it out and you're good. Like, no, I mean, you're owning an asset, it's real estate. And you need to take care of it. And it's not like a
Yeah.
stock trade or something,
Right. Yeah.
like it's brick and mortar. You
Yeah.
need to take care of it,
Yeah.
So,
Yeah. That's awesome. Yeah.
and I
And
wish, and I should have bought when you're sitting, that's the other thing. When you see very smart people around you doing something, pay attention.
yeah.
Because
Yeah.
from the transaction side, I was filling all of those orders and like, oh, making my little commission here, and this is great. And it's like, you look in Andrew, and I bring up Andrew because we joke about it, but he was like, you made how much? And over that course of time, it was like $9 million in gross commission income over like a 4 or 5 year period total.
Yeah.
Right. But he was buying real estate during that time.
Mm-hmm.
It's like the income goes away, but the assets stay. Right.
Yeah.
So yeah. So I would have been buying back then. I would have figured out how to buy back then
Mm-hmm.
and just follow the lead of the smartest guys in the real
Yeah.
estate at the time. So
Yeah. Yeah. Hindsight's always 2020, of
yeah.
course.
Yeah.
We all wish we would have bought a lot more properties and sat on them. Now the market the way it is, but yeah, those are all great points, and I think those are very similar realizations to ones I've had myself along the way. So I'm super pumped to learn more about the short-term rental side of things too, as that starts to evolve. I didn't realize that was going to be like an option on the platform, so that's really cool to hear, because I mean, from a short-term rental or vacation rental standpoint, I mean, deals work really well right now, right off the MLS. Like, it's just that there's so much demand for it and not nearly enough hosts out there, that you can really, I mean, I can see how this platform could be just a great supplier for a lot of people in this community who are in vacation rentals. So,
well, can I share some really quick?
yeah, go ahead.
Really interesting. So we launched down here, and I'm like, oh, the rentals are going to be a no-brainer,
Mhm.
right? The challenge down here is the taxes, right, are a lot lower, but so is the monthly rent. So when we started looking at it, I was like, oh man, I don't know. And a lot of the, and again, spirit of transparency, a lot of the clients we work with that are buying traditional rentals are buying in B minus, C plus areas,
Mhm.
not putting a ton of work into it, and they'll get their 1% rule and they'll hit their equity marks and all that. But the Airbnb, I mean, this is where Airbnb was born,
Yeah.
right? Florida. Yeah. And Bill Powers, right?
Yeah. Oh yeah.
So Bill's a client of ours.
He was on the show as well. Yeah.
Yeah, I think I don't know if I watched it, but I've seen him post on your comments. And Bill, I so much respect for Bill Powers.
Yeah.
I mean, built his rent to own portfolio, but is doing a ton of Airbnb now, and he's a client of ours. So I won't get into his details out of respect for him, but he's like, what are you guys waiting for?
Yeah.
Oh man. So yeah, I'd love to work with you on just finding out what you would want to see and what your listeners would want to see, because we're doing it. I mean, we're going to be pulling that data in,
Yeah.
and then figure out where to go from there, because the returns are
Yeah.
crazy.
Yeah.
Crazy. Bill was
Yeah.
sharing on one of them, and I mean, he uses one of them as, I mean, for a family vacation place, for them
Mhm.
for a couple months. I don't know if he shared this on his call or not, or
I don't
on,
think so. No.
but again, I won't divulge everything because he's a client, but he's like, he uses it 8 weeks out of the year and still makes a killing on it.
Yeah.
I was like, okay. And he's great.
Yeah.
He's like, Rosario, as soon as you guys want to start trucking that way down in Florida, let me know. So
Yeah. Yeah. The same ones that you're probably sending out showing, projected numbers as a long-term rental, that's probably triple on the exact same property as a short-term rental, or more in some cases. So yeah, there's slightly different variables you're going to look for and stuff like that, but a lot of them, it's the exact same property would work well either way. So yeah, I'm happy
was
to.
that a separate
share.
conversation that you start telling me what we should be looking for?
Oh no, I mean, like, so that I just
What
went
would
over
you
this.
want to see if we sent
Yeah.
you a deal what would you want to see on that deal?
Yeah, this is perfect question. Because I just went over this on a webinar that I did last week. The factors that make a good market or a good property, and so there's four main ones beyond the biggest one is the investor themselves. They obviously that's why nobody can answer what's the best market for Airbnbs, because it's different for everyone based on your individual goals. But affordability is a big one. So the price point to nightly rate variance, that's the area that
I'm taking notes, Kirby. Okay, go ahead.
Yeah. So because it's not correlated at all, which most people think it is. I'll buy in an expensive area and the nightly rate will be really high then. And it's just not that way. But there's pockets where it's very affordable and the nightly rate's really high because it's just not saturated. There's draws, there's different variables that affect that. So obviously nightly rate. Seasonality is another big one. So where do people go that there's going to be less of a low season, which most of Florida probably has a very little low season, especially right now. The desirability component, so draws around there. So if you can highlight here's who your ideal guest is going to be because of these specific draws in the area. And then the fourth one was legality. If you've figured out the current rules for that city and can provide that that's always a huge intrepidation for people. And they're like, well, how do I know what it is? Where do I get that data? On Airbnb, it tells you, city by city, what the current laws are, but it changes all the time. So if you can pull it from maybe the city council information, Airbnb, different places, that all that together answers so many questions. And then, I know you guys do a lot of the rehabs. If I don't know if you want to offer rehab and furnish a property for someone.
We're rehabbing a few Airbnbs right now, but I didn't think of the furnishing piece.
Yeah, because I work with people to help them get their first Airbnb set up, identified, purchase, set up. And it works anywhere, but that's the big scare for people who, when they are going to buy something remote, they're like, how am I going to get the furniture moved in and stuff? And so we work with the handyman to do that. But if you guys offer that as a service, here's an estimate for how much it's going to cost to furnish it. We can do it for you for a fee. That's awesome. Because that basically makes it turnkey, because there's always a transformation process from a house into an Airbnb, into a good vacation rental. So I think those are the main things that if you highlight, it makes it a no-brainer for people.
I'm glad you brought up about the municipalities, because we already include that in our rental packages. So minimum lease terms, because you can't, some of these you've got to be 1 month, 3 month, 8 month, or they don't allow any, nightly. It's interesting. And the demand down here is so crazy.
Yeah.
It's I was and it's funny you brought up about the price point to nightly rate variance, because I looked in our neighborhood just for kicks, and I was like, okay, there was a house for like 600, 700, something like that, and it still made sense as an Airbnb. And I was like, oh my gosh. Because right now, I think, because this is technically off season, like the winter when it's ridiculous. And I was checking one of the houses, and it's already booked, like October, November, December, January, February, March. Like it's just blocked off. You can't do anything with it. And the nightly right now was like high twos. I can't even imagine, what it is in high season. Probably fours, who knows, what else was there? Well, that's it. The municipality piece is a big deal, and people think that they're going to sneak one by. There was a couple that got locked up because they were running like this Airbnb operation in municipalities that you couldn't do it, and they had a ton of properties and kept trying to fly under the radar. And it's like, no, you need to do your homework, especially in Florida. You can't just set up anything.
Yeah. Yeah.
But
I always tell people like 80%, it's around 80% of cities have either allowed it or they haven't made a ruling on it. Obviously, all the big ones have for the most part, and a lot of them have a lot of red tape. So I always tell people, like, why even mess with that? Like, it's like,
yeah,
why run into a brick wall right as you're getting started and have
yeah,
to try to skate around it if you don't have to? I mean, if you inherited a property there and that's your only solution, I get it. But why? Like, there's so many markets right now where it is allowable and they're a pleasure to work with. Like the difference from doing deals in Chicago to where I'm at now in Indiana, it's like a breath of fresh air. It's like the birds sing in the morning when I go to properties, because the inspectors show up. They're like, "Oh, thank you for rehabbing this place." And I walk in to get a permit and they hand it to me. I'm like, "Wait a second. No, this should take 6 months." And like, I got to pay some guy who's had somebody's palm in
yeah,
Chicago
Vinny.
to,
You
yeah,
gotta pay Vinny.
exactly. To get this done 6 months from now. And they're like, "No, that's not how it works here." I'm like, wow, this is amazing. So why deal with that to start
Yeah,
with? It's just crazy. So
not worth it. That's
yeah.
awesome. So hey, when we get this going, I'm gonna want to pitch this at you so you can see it and test it and tell us what you like, what you don't like. Because we're going to continue with the rental piece in it, because at least if we go that route, we start doing Airbnb personally, I'm still going to underwrite it as a long-term traditional
Yeah.
hold. Like you got to protect yourself, and
Yeah. It's insurance. Yeah.
worst case. Yeah. So, yeah, but I'd love to put it in front of you so you can take a peek.
That'd be awesome,
Yeah.
man. I'd be honored. Thanks. Cool.
All right.
All
What else do you
right.
got for me?
Nothing, man. This has been amazing. I think the listeners are really going to have a lot of great takeaways. I think there's going to be a lot of people who are also interested in potentially utilizing it for either long or short-term rentals. So if somebody is interested, what's the best way to kind of learn more?
I'd reach out to Mark. So MARK at clickinvest.com. So Mark at clickinvest.com. Mark Wilton, which I know is a friend of
Yeah.
yours as well. He's
Yeah, he
great
was on the
guy.
podcast as well. You could listen to his podcast.
Yeah, he's a great guy, and he can share more info. Or you can go to clickinvest.com. If you go there, you can connect with him as well. So,
Cool. Sounds good. Well, thanks again for taking the time. This was a lot of fun.
yeah, same here, man. I appreciate it. It was an honor. Thanks, dude.
Absolutely. Talk soon.
Bye-bye.